Hello, everyone. It is 8:02 a.m. Chicago time, 9:02 Eastern on Thursday, the 22nd of March, 2018, the day after FOMC. We've got pretty good movement overnight. Markets, U.S. indices at least, actually across the board, are selling off. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance right now is essentially what the market is doing is it's repricing the position across the board, seeing the market coming out of equities, out of risk and into safety. The product that is leading the board right now, surprisingly, is the U.S. Treasury bond trading up 1%. Trading up 1% changed on a futures price. That's not a yield. It's up a handle and 15 ticks. That's pretty big for the bonds. Followed by the Japanese yen, up 0.7%, and gold up 0.61%, then the euro bond up 0.52%, and then the 10-year note up 0.44%. A clearer picture of the market running away from risk I haven't seen in a while. So we're selling off, and that's where we stand right now. I'm not seeing anyone in here. Am I coming across clearly? I hope I am. As far as what we expected yesterday, of course, FOMC. Let's see. FOMC came out and met expectations. The market popped higher and then sold off. A little bit, but we did push pretty strong. We pushed to the upper target that was outlined. I'll go over that in a minute. Coming into today, we had initial claims already, and on deck is leading, services PMI, manufacturing PMI at 9:45 Eastern, and then leading index, U.S. leading index at 10. Those are some key numbers that are coming out. A lot of news overnight. The BOE made an announcement on their bank rate. UK and the Eurozone, as well as Germany, had a lot of numbers that came through. The Euro stocks and the DAX are the laggards. Today, the Euro stocks are down 1.72%, and the DAX is down 1.69%. It looks like a selling day, and it looks pretty good to me from an opportunity perspective. Let's take a look at what we expected yesterday. Here it is. So yesterday I was looking for a drift up to 27.27, a little bit of bouncing around, and then a push to 27.33, and then on the FOMC I was looking for a push up to 27.45, and then if the market didn't like it, then I was looking for 26.90 below 26.90. Currently, we're trading 26.87 and a quarter. And those of you who are in Convergence chat room, I posted yesterday, once we gave up the top side LVN at 27.42 yesterday, I did say that be careful here. It is likely to push down to 27.20. This is, at this point, the market was trading around 27.38. I said the market's likely to push to 27.20. Is expected, and then once that gets done, I'm looking for 26.19, which didn't happen until the overnight session. Not saying that to say, look at me, I'm right, because I don't make money being right. I just make money taking trades. But I'm simply saying this is the market is following the typical auction process and is acting somewhat predictably right now. So this was the plan yesterday. A drift up until FOMC. Here's what actually happened. There's the drift up. It went to 27.44, believe it or not. I was looking for 27.45 yesterday. Went to 27.44. on the FOMC. So we did get this consolidation again. Here's what was expected, right? Consolidation. Let me change my pen. Okay, consolidation, and then a drift up, and then ultimately a test of 2745. Okay, and so this is what happened. Consolidation, drift up to 2733, got to 2734 on the stock zone there, and then ultimately 2744, missed it by 4 ticks. And then what happened is we had a very tight IB. This yellow line right here, these two yellow lines, that's the first hour's high or low, very important as a measuring stick for what the action is. We did push pretty well out of there, but then we ended up pushing the low as well. So we ended up with a neutral day type. And this is a neutral normal. We closed right inside of the IB. The market had a clear excess high, and it also tested yesterday's low by a tick. If you look down here, if you look very closely right here, it actually pushed yesterday's low, or the prior day's low, which was Tuesday's low, by 1 tick. We had a 1 tick failed auction. This is almost a textbook example of a 1 tick failed auction. And I did mention again in the room that this is likely not to be seen. This low here is not likely to be seen for the session. Of course, made everyone nervous when the market started to tumble again, but it was true. It just was not seen for the session. It obviously broke in the overnight. But overall, what we have is an excess high with an odd distribution on the rest of the day. We have almost a double distribution, but the market, the pricing, the way the market traded, it basically accepted prices from 27.32 all the way down to about 27.17 or so. There was no consensus. Consensus, again, as I covered the other day, consensus looks like a bell curve. That's consensus. That's why we always track where the point of control is. That is the highest consensus price in terms of volume. So that's what we got yesterday. Pretty methodical trade yesterday. It's the rally off of the, actually I'll show you. The rally off of the FOMC was pretty good. Let's see if I can find it. Find the trade. FOMC is right there. There it is. The FOMC was released. The FOMC was released right here at 1 o'clock, and the market gave a small opportunity for a quick dip. This line here is the theoretical average, and there's the trigger and scale, missed scale right up here, and had to scale some more there and close there. I felt that the opportunity yesterday was pretty decent to get on that long. And if not, then of course, it's not recommended to trade the high volatility. It's not for everyone. But if not, then there were plenty of pullbacks to get short back into the range. The overnight session looked like this. Just tumble, and it all happened in the European session. So we were mostly sideways, fairly uneventful, but then the European session kicked in, a whole bunch of numbers and releases, and the market's just not able to hold on to any bids. It's just been moving from one stock zone. Here's a middle of stock zone mid. There's a stock zone edge and a stock zone mid. Again, just moving from one stock zone to the next in clearly a trend day in the overnight session on Actually, the volume is about twice what is common. You would expect it to be a lot larger for the type of range that we've had, but it's not. It's been kind of interesting. But the overnight session shows no consensus on price. It shows that the auction down to find buyers is unsuccessful as of now, which means that we're likely to continue to explore lower. We're in a key area here at 2685. The composite low volume node's just above us at 2690. This is a key area for buyers to step in and push things back, and the target to push back to is the point of control. Again, we move. This is the low volume node at the top that I talked about earlier, 2742, I believe. Once that fails, we look for the point of control. Once the point of control gives it up, we look for the other extreme, which is a low volume node. If the low volume node holds, we look for a return to the point of control for balance. So the overnight session is talking nice and loud. Inventory is mostly short on price and aggressor volume on the delta, and we're opening in a gap. Now, if we look at what we've done over the last few days, let's turn a few things off. Let's turn the stock zones off, that off. If we look at the last few days, now Monday we gapped down. Okay, so we gapped down. We had this nice big range on Monday. And then we've traded sideways within that gap zone. We couldn't take the gap zone, get into the gap zone yesterday. We failed to do so at 27.44. The gap zone starts at 45 and a quarter. And we ended up right back in the middle. We ended up finishing right against the point of control of the region at 27.20. And then today, so what we've had is a few days of compression. So this is the kind of action that where I would put on a micro composite to see what we've done so far. And the micro composite shows that it's been a pretty balanced trade back and forth. Volume's pretty low in this region, by the way. Is relatively low in this region. It's Tuesday's volume was very low at about 800 or 900,000 for the pit session. Yesterday's was okay at 1.25 million. 1.1 million is the common daily RTH or pit session volume. So what we've done is we've broken away from this 3-day balance and lower. And so we're likely to see some continuation initiative movement down into the 2670s before we start seeing a base. So coming into today, let's reset this chart. All right. So coming into today, I'm expecting, there we go. So the review portion is over. Let's look at what we're expecting today. So coming into today, we're right against the overnight low. Again, really good volume coming into the pit session from Globex, and the expectation today is that we are likely to put in an open test drive up. I'm looking for resistance into the 2695 and then again 2697 area. I'm looking for the market to consolidate in this area and then for it to resume selling down. I'm looking for a response because that the overarching trend, the big picture trend, the OTF trend is still up. So here we go. And so that's the primary scenario. I'm looking for a response. Now, if we don't get a response, that's great. It's the fact that that scenario 1 didn't work gives us a very strong play on scenario number 2. Scenario number 2 looking for responsive immediately. That fails. I'm going to be stalking short. If it does that, I'm going to be stalking short initially. with the short-term trend against the long-term trend for a return back into the opening swing, for a push down into the 2677 area, that stock zone you see there, 2678 quarter, balance, and then continue lower into 2670 before we pop back up into the close. That's scenario number 2. Now, scenario number 3 and 4 still likely, but I won't cover them. Just remember, for those of you who are part of Convergent, we talk about this all day long, or whenever there is something to talk about. Remember, creating these scenarios isn't supposed to be a crystal ball. Creating the scenarios is intended to prepare you for what you will do in case. So it's a form of visualizing the action before it happens. The stock zones are just areas that I've outlined where I will engage with the market. I used to do them by hand. Now they're right on the screen and they're on my book map. And it's just much, much easier to just track things. So if I don't trade in the middle in these light gray areas, I only engage with the market in the dark gray areas, given the right setup and the right behavior in the order flow. So those are your main plans. I want to remind you, now this is a good opportunity day. This is a good day to probably do what Anthony Crudele said in yesterday's webinar, which, by the way, is recorded and will be released to you this morning. Like he said, it's probably a good day to follow his method, which is to wait for the first hour to get by for the market to set up its scenario. So maybe, especially if you're trading a smaller account, it would be good to let the initial balance form, let the first hour put itself in place so you can see what is likely to take place and what is in your favor in terms of probabilities. I like to put the slide up consistently. What must you do today to win the day? Just remember that when you're coming in every morning, you're wasting your time unless you're working towards something. What is that thing you're working on today that makes it so that you win the day? Good luck.